Welcome to another edition of the San Diego Real Estate Market Update. We have March 2018, and if you want to listen to any other market updates, please don't forget to subscribe on YouTube. My name is Lenska. I'm a real estate investor and broker for residential and commercial properties. I also serve on the board of SDCIA, which is the largest investor club in Southern California. Here we try to empower, engage, and educate investors to learn about all subjects of real estate. And me as a broker, I'm always interested in helping people succeed in their real estate business, in their investments, or in their career. So if you have questions like, is it cheaper to own or rent? Or are your tenants paying market rent? Or is it the right time to buy or sell? You can call me or email me, or just keep on listening to the market update to find out today's facts and tomorrow's opportunities, because this market update is about real facts and real numbers. Remember, there's no fortune telling here, just fortune building. As we investigate the health of the real estate market, we are looking at those following data points: the sales and inventory numbers, the interest rates, the employment data, home purchasing sentiment, the home builder sentiment, and the affordability. And usually we look at the notice of defaults and trust deeds, but since there are no changes and no pertinent information that would help us as an investor, I came up with a new index, which is the LIOS/Lenska's deeds. This is Lenska's information opportunities. By putting this presentation together, so sit back and enjoy it. Here we go. The San Diego County detached median sales price climbed back up to $611,000, which is about a 9.1% year-over-year increase. We have been in October, we have been at $607,000. Then we had a little decline during the December months, but we're climbing right back. Attached, we are at the highest point ever in history at $426,000, which is a 11.7 year-over-year increase. It was about time for the median home price for attached units to increase, as we have been hovering since June 2017 around the $410,000 mark. To the average price per square foot, as you can see, in March 2,209 price per square foot. Now we're up to 394, which means we have doubled since March 2009, and only took us 9 years. It's a 7.9% year-over-year increase. February, we see the same thing. We have been increasing up to 426 dollars per square foot, which is over a 10% year-over-year increase. Same scenario. The lowest we have been was about $202 in March 2009. Still very hot because it's all about supply and demand. We have demand, but we don't have supply. We only have 3,374 units, which is still a nearly 11% year-over-year decline. In December 2012, we had nearly 6,000. Since then, we have been gradually lowering the inventory to 3,374. We are also down just slightly because we only have 1,361 units available for sale. And March 2013, we had about 2,519 units. And again, since about March 2013, inventory has been decreasing, and so has the price has been increasing. So how fast can we sell detached homes? We're still about a month, 29 days. That is the average active market time for detached. About 26 days, which still is a decrease from last year. Now, the question is, how are the mortgage rates moving? Obviously, they are up. We currently have a 4.5% in the conventional 30-year fix, which the payment is about $2,200-$2,300 if you have a loan of $400,000. Now the FHA and VA 30-year fixed is at 4.125, which gives you just short of a payment of $2,000. No news here. We still are close to 6% for the non-W-2 earners, like the 1099, self-employed and business people, still hard to qualify, or we are paying a premium at 5.875, and you guys can see the difference is about $350 compared to the 4.125. Very strong in employment. The average in the US is 4.1. San Diego still stands about 3.5, 3.6. They have been adjusting it a little bit more up. How do people feel about the real estate market? Fannie Mae goes out every month and interviews over 1,000 people and asks them the following questions. Is this a good time to buy? Is it a good time to sell? Will home prices go up? Will mortgage rates go down? How confident are you about not losing your job? And is your net household income significantly higher in the past 12 months? We fared in March. The home purchase sentiment fell 3.7 points in February to 85.8. And this the highest one was value was at 89.5. So we practically reversed the increase we had during January and February. People probably blame it on the volatility of the market, maybe the tax bill that started some confusions, and the expectations of interest rates rise. No, not just expectations, we have seen the mortgage rates rise, is creating the more negativity towards the market. So people really feel it's not, 5 points down for time to buy, or is it a good time to sell? Even that one decreased. Less people think the home prices will go up, and they also think that mortgage rates will go up, and they're fairly safe in their jobs, but household income is not increasing. So overall, a fairly negative reading for February. The home builders are still soaring. We have an unchanged 72 points in February because the pro-business political climate that will strengthen the housing market and the overall economic growth. But on the other hand, you see the supply side construction hurdles and shortages of laborers and available land, plus building material prices are still increasing. So the Western United States, the builder sentiment is still over 80 points. Here we are. The median sales price for a new built single family home is $382,700. These data points are for the US, and the median home price is up from $323,000 year over year. The blue line reflects the 6 months moving average, and currently we are producing about just short of 600,000 new build units. So you can see that the existing are down, but the new builds are up. Also, the numbers of sales are down. We're currently at 5.4 million units. Prices here about the affordability in Southern California. It's tough out here. At least we have the good sunshine to make up for it. San Diego is 26%. The best affordable markets are still San Bernardino at 51 and Riverside at 38. No, the affordability is depending on the interest rates and the monthly payments. So Redfin has an interesting survey. They asked buyers if they would change their buying habits if interest rates would pass 5%. And practically half of them would have no impact or would actually get off the fence and make a purchase. Some of them, 21%, said that they might have to look or change their plans, buying a smaller home or maybe find a home in a different area. 6% would cancel their plans to buy a house. Builders say. John Burns Real Estate Consulting asked home builders the questions if they would feel there is an impact from increasing interest rates, and look at 29% would likely see little or no impact on sales, especially to affluent buyers who currently own their home. 56% would likely experience a 1 to 10% decline in sales volume, which is not significant enough to cause the home builders to drop prices. 15% would experience a little bit of a decline in sales, and especially when it comes to the struggling entry-level buyers. Here's a little comparison to what if the interest rate is 4.5% with a 15% down payment, your monthly would be around $3,050. $500. Being 5.5%, it would bring it up to 3,820, so which is about a $320 per month increase, which is quite substantial. Coming back to our supply and demand, and as we know, population growth will spur housing demand. This map shows the shades of green show higher growth, while the shades of orange show lower growth or even a decline in a few states. So Utah, and with its moments, its population growth rate is about 11.5%. So Utah is the youngest state in the US, which means it is poised to have future growth demographically. The largest state with the highest long-term growth rate is Texas. Texas has about 7.5%. It has a good mix of high birth, high immigration, and high migration from other states. So Texas is on fire. Obviously, California is another large state with high natural growth rates due to foreign immigration. The other states that come are Georgia, Washington State, and Virginia. But look at Florida. Florida, you go there to die, it looks like it. So this is the retirement capital of America and has lots of older people, even so, despite strong migration and immigration trends. Has a zero state income tax to boot. So here are the best and worst US states by natural increases in 2017, which should give you a little tip on where to invest out of state. And we are here at our last data point, LIOS, so deeds, and the last tax bill. It had a lot of good stuff in for real estate investors, developers. There were opportunities, tax breaks, and I will let you know which neighborhoods to invest in. Please don't forget to subscribe. More than 800 of California's poorest neighborhoods could see new development. And that's thanks to the tax breaks included in that last year's federal tax bill. It got passed in December and allows investors to avoid paying taxes on all or part of their capital gains from investments in area designed as opportunity zones. Investors won't have to pay taxes on their earnings as long as they hold the investment for at least 10 years, or they can avoid a portion of the capital gains if they sell after 5 years. So Governor Brown recommended mostly urban neighborhoods mainly around LA County and Inland Empire, about 97 of those areas. But San Diego County fared pretty well too, with 43 recommended areas. And currently, Governor Brown is seeking feedback for whether removing or adding neighborhoods. So this whole story will be continued. The opportunities here in San Diego. There's actually an active interactive map. You can click on that link and it will guide you to that website. Or you can just see where the extension of San Diego downtown or La Mesa has some areas, El Cajon, and in the South Bay too. Up here in North County, we have something in San Diego, in Escondido, and in the San Marcos area. Do you like the new pro housing trend? Are you prepared for the next real estate trend? And are you getting the tools and support you need to win? Here at SDCIA, it's always a good time to learn. We offer several classes every month. You can visit our calendar page on our new website. And this month we have Saturday, March 17th, Sales and Negotiating with Claude Diamond. And I personally would like to invite you to the class I teach Saturday, March 24th, to determine ARV like a pro. It's all about determining property value, comms, and appraisal issues. Last word from your presenter in chief. I have two other events, one on the third Saturday, which is a rehab field trip. We're going in the field and visiting investment opportunities, and the Real Estate Profit Building 1.0 meets at Denny's on the third Thursday. Here's my information. Please, I always appreciate referrals or to share this market update link with others. Thank you for listening. Looking forward to the next market update.